What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champion of Wall Street, the bearded boy wonder, Dave Bartosiak, my friends. Getting back into earnings season here. That's exciting. I know I'm excited. You ought to be too, because we've got I don't know, it's like a new world here for Zach's Live Trader because of not only the chat room, which we're in all the time. You can see that. Well, eventually it's going to scroll along the bottom of the screen here. Our little chat link in Discord. Got a lot of people in there. But also, since making things free, we're starting to see a huge uptick in the amount of subscribers here. So lots of people hanging out, lots of people learning. That's exciting stuff. With that being said, that means there's a lot of newbies out there. So forgive me, guys, if I start going back to basics a little bit. Maybe not completely back to basics, but at least, talking to them, talking about, some of the more basic stuff a little bit more. Okay, so I'm not going to focus on the basics, but we're definitely going to address them a little bit more than we have in the past, I guess, while we start to get people up to speed. And then, for you guys who've been around here for a while, have heard me say, I'm moving. That's right. No more Sunny Isles Beach. I'm a little bit, I don't know, I'm on the fence about it, about the whole Sunny Isles Beach thing. As much as I love the mean streets of Sunny Isles Beach, I am, I'd like to get out of here because it's a little too crowded. But I'm going to Sunrise, which is out by the hockey stadium, which would be cool because I'll be able to go to a bunch of hockey games, which I'll enjoy. Because for like $6 too, or $8, I saw hockey games out there. So it's going to be a nice little transition, and we'll see what happens. We shall see, my friends. All right. So that being said, we're going to get in here on DPZ, Domino's Pizza. A shocker here, I want to show you guys something first. And, by the way, if you hear me go like, "Wow!" and then run over here, earlier today, there were some very inappropriate ads popping up on this Google AdSense with this. So hopefully I marked them as, please do not, put your mail enhancement ads on my feed. Actually, wait, can I fix it? Oh, I'm going to game the system. Oh, hang on, guys. Let me game the system here. Now that I'm thinking about this out loud, what I can do is I can just make this big enough to where it'll I'll just keep the ads on this side of the page where you can't see. Then it doesn't matter what pops up out there. Look at that. Ha-ha! I've outsmarted Google yet again. Okay. Good. So before I dig into this chart here, we do this a little bit later, typically. I'm going to go, we're going to get out here. We're going to go far. That's right. Look at how far I'm going. To the beginning of time, 2004. Now look at this. Comparisons. That's right, folks. GOOGL. And just for giggles, why don't we throw another ticker in here that you guys may have heard of? Throw Amazon in here. Okay? So this is comparison of the yearly of the overall returns. Okay? Overall returns. Bottom line here. This is Google since the IPO. Here's Domino's, and here's Amazon. So Domino's has basically returned what Amazon has returned going back to 2004. That should come as a surprise. Let's see if we can get closer here. Look, quarterly going back to 20. How far can I go? Oh, this could go back to 04 also. So this is September of 04. If you go to September of 04, it's actually outperforming Amazon. Okay, and of course, Google's in the dust. So just something surprising that people don't realize is Domino's outperformance over the course of a very long period. So Domino's is just a tech company that happens to deliver pizza, right? And it's come down off the highs a little bit, which is something we'll talk about. The emergence of, or the re-emergence rather, of the Hut. Not Jabba, but Pizza, the Hut, for you Spaceballs folks out there. Okay, so that's what's happening now. Domino's, Pizza Hut, going at it. The Pizza Wars. The Pizza Wars are here. Let's kick this off like we always do. Price consensus and EPS surprise chart here on Zax.com. So black line corresponds to the right y-axis, which is price. Let me get this framed up a little bit better. The multicolored lines represent the evolution of our Zax consensus estimates, or the EPS, corresponds to the left y-axis. The green arrows, earnings beats. The red arrows, there's a couple of them. There's one cha, there's one cha, there's one cha, cha. There's a few of them. A few earnings misses. But look at this overall, right? When you're looking at Zach's consensus estimates, the other one that was real pretty like this, anybody remember? Bueller? Constellation Brands, STZ, where you get this just nice year-over-year growth. It's ticking up, and for the most part, the earnings are always moving in a positive direction. And as such, the stock tends to follow along with that. So what you want to do in situations like that is you want to look for price to come down while these EPS estimates are still in the same direction, and go ahead and buy. That's basically what you want to do with something like this. So I'm already tipping my hat, but look, this is the thing. Tipping my hand, rather, not my hat. I'm not wearing a hat. Hats are all over the place. Lots of Cubs hats. Go Cubbies. Sorry, Nationals fans, but I just don't like you right now. So lots of earnings growth. It's what we want to see. But what's the risk, right? So we do see that the pattern's been great for these guys over the last couple of years, and this is the limitation of our analysis by using this is, while we know, I guess this is almost better for longer term sort of trajectory, which is right. I mean, that's what we do at Zax overall. So what's the risk heading into this earnings report? It's same store sales, because there was a little bit of a slowdown, I believe, last quarter in same store sales, and that's kind of what people were worried about. Danny's talking about them getting hammered last earnings report. Well, that's what'll do it, right? Is earnings reports is the same store sales not being so good, right? And then now again we are worried about Pizza Hut coming in and eating up some market share. That's right, I said Pizza Hut eating up. I stole that from an analyst report anyway. So okay. So overall price consensus solid. All right. Look at everybody. I love this. Now it's Wild Bill Phillips instead of Bill Phillips. What is it? Aces over eights? Is that what it is, Wild Bill? I hope you're not holding that. All right. So detailed estimates page here. Michael Price back from Europe, huh? Hey, what nationality are you when you're in your bathroom? European. Ha ha! Oh, man, I'm full of dad jokes today. All right, back to Domino's. We've got them as the Zax rank number 2 buy right now. They're going to report before the bell on Thursday, right? So we got the rest of the trading day today, all of tomorrow to figure it out. And then tomorrow we're going to do sort of a morning of kind of thing. Well, not, or day of kind of thing for the banks. For what did I say I was going to do? City? We're doing City, right? Yeah. Okay. I skip all this, and you should too. Just get down to the numbers here. Revenue growth, 11.31% for the current quarter. Next quarter looks like 10.62. Current year numbers, 12.81. And next year, 9.84. Solid revenue growth here for Domino's. Of course, it is slowing here, so that might be a little bit of a concern, but that's a whole lot of pizza. And look at how that's translating over to EPS. 26.82% EPS growth for the current quarter. Next year, accelerating to 33. Current year is going to be 33.63. Next year is going to slow down. It is, right? Dead man's hand, aces over eights. And that was Wild Bill. Wasn't it Wild Bill Hickok that got shot with that aces over eights thing? Anyway, so next year, 20.15%. PJ's in the house. What's up, Mr. Chumber? How you doing? Okay, so let's look at what these analysts have been doing here recently. You got 4 analysts have come out over the last 60 days, increase the current quarter estimates, 5 for next quarter, 5 for the current year, 5 for next year. The braver ones were the slower ones over the last 30 days, but still increasing. So that's why you've got the Zacks ranked number 2 buy on it. Let's look at the overall effect to the Zacks consensus estimates. You can see gone from $1.17 to $1.22 for the current quarter, $1.79 to $1.97 for next quarter, $5.50 to $5.75 for the current year. Next year, $6.53 up to $6.90. So it's looking good for Domino's. I must admit, when we're back in Chicago, which is the land of fantastic pizza, I actually got a big box of Lou Malnouts for my birthday. Lou Malnati's. My mom sent me some Lou Malnati's, and I got Italian beef. It was all frozen, spectacular. I still got a Lou Malnati's pizza in the freezer, sausage, fantastic. But anyway, even though when we're in Chicago, when I'm in Chicago, the team at Zacks, we order Domino's every once in a while. Bang for your buck. It's just fantastic. And they've got a great variety of stuff, and it's just not terrible. So we've been talking about Domino's for a long time over at Zacks. Big fans, and it's been a lot of fun. Okay, so surprise, small surprises, which is good. All right. So everything's been pretty solid here for Domino's. Looks good on our price consensus and EPS surprise chart. Looks good from the Zacks rankiness. You know what that means? To the charts. To the charts. What can we say about Domino's? It's a fantastic run, and it's come under some pressure here. So sort of topped out at 222 without even, look at guys, I'm going to promise you, I have not looked at the options chain yet, okay? Right? This 52-week high is up here, let's call it 221. Stock's at 208. Again, without even looking at it, how much do you guys want to bet that if you add that put and that call, it's going to be $13? How much you want to bet? Don't go cheating, guys. Don't look ahead. Let's just see. Just keep that $13 holler in your minds. Yes, Wild Bill. I think they do. Godfather's Pizza. Pizza's so bad it made my own children hate pizza. If you haven't seen the Tyson thing where he's Herman, is it Herman Cain? You should check that out. It's really good. Godfather's Pizza. Well, if I'm elected president, you remember he was like a presidential candidate. It's like what was the line? He was like, if I'm elected president, I'm gonna change Taco Tuesday to Pizza Thursday. It's so good. Mike Tyson doing comedy, and yes, it's frightening. So look at what's happened. They got in a little bit of trouble into this 50-day and just lights out. 50-day couldn't hold. And they get all the way down to the 200-day. Okay? A little bit of a rally again. Still, the selling pressure comes in. They retest the lows. This has happened so very often to stocks. What I call the rope-a-dope, also known as the stop grabber. Now, what do I mean by that, guys? What I mean by that is these algos, they push stock down through the previous low. And when they do that, what they're doing is they're grabbing stops. So what I mean by that is people will buy you know, this day into these days, whatever, all these days, the buyers, and then they put their stops underneath the previous support line. So they'll put the stops all down in here, and these algos will come down and they'll get these stops and they'll get them all out, eat them up, and then inevitably the stock runs back up higher. Very frustrating for the guys who get stopped out, but that's the nature of the business. And I'm sorry we can't go 80s. This is not 80s like this. This ain't happening. I'm not listening to Paradise City right now. Sorry. All right. I'm supposed to be a little bit more hardcore than that on this channel here. Okay. So, stop grabber comes and gets these guys, these poor folks, and then it goes higher. So what's happened since then? Not only above the 200, but we're above the 50. I keep telling you guys, in this market especially, the stock needs to have a very compelling reason to trade below its 200-day moving average. A very compelling reason, okay? Domino's did not have a compelling enough reason to keep below that 200-day, so it's rallied. Up above the 50, retrace to the 50, boom, they bought the 50, okay? That's confirmation. So that means that the 50 will provide support. And that's where we're at right now. I could just put on the Slayer channel. Let's do that. How about we just go to death metal here, guys? I'll switch it up. You know I like switching it up every once in a while. And I'm sure there's some kind of like copyright thing about this, but I don't think this video is monetized, so maybe it doesn't work. I don't know. I don't care. There's some Slayer for you off the album Reign of Blood. That's right, guys. Rocking out. All right. So anyway, 209 here. I think that 50-day will provide support should the stock come back down. You also have some other areas that are pointing out at me here. Look, guys, you got to use this horizontal histogram, okay? You can use it in your day trading also, but here it tells you where there's been gaps in the volume. And there has been a gap in the volume down around 200. That little valley could get filled, right? And that's sort of an obvious level of resistance too. Got the psychological resistance there. Then it came down at 200. And then what used to be resistance provides support. And then the fact that there's a little valley in the volume, that could attract some price action there, okay? So these are some levels we need to keep in mind. 200. Then, of course, the 220, 221, which is up at the highs. So these are the things we got going on. All right. So we got some levels. Good. Overall, what I think about the stock chart, I like it. Of course I like it. Nice move here from the lows. Broke out above the 50-day again. This 50-day is starting to move away from that 200-day. Everything's looking good so far. Okay. Now let's get back to the bar chart. Change it from the stack view to the side-by-side so you can make your quick little calculations. Here, stock's at 208. We're going to have to call it 210. We're going to call it 210. At the money call. So we got 680 by 670, right? So that's what, 625, 45? Yeah, there we go. And then 630 by 740 on the put side. So we're going to call it 685. Add it together. You can't write this stuff. That just happened. 1310 is what the options market is pricing in. It's always good when you agree with them. It's even crazier when you can see it in the chart before crossing over to the bar chart side, looking at the options chain. This is wonderful stuff. Okay, so just like I see into the future, dude. We don't even have to look at this options chain. I know exactly what it was going to be. Huh. Now, if only I could see to the future to figure out what the heck's going to happen with this stock following earnings. Let's go to the stacked view instead of the side-by-side. Just so you guys know, actually, that 1310 on a $200, oh, not 200, 210. They're looking for about a 6.2% move here in earnings. And basically the options market looking at it go, well, it could dip just below that $200 level, or it could go up to the 52-week high. In terms of the chain, guys, I think they got it figured out pretty good. I think they've priced it to perfection right there, okay? Sometimes totally astray from what I'm looking at. Other times, like in this scenario, it's like, you know what? That's pretty darn good. DPC on the revenue side. I want to go just a little bit further back. We weren't eating pizza in 08 and 09. And then things started to get good and have stayed very good. So there's that. Let's look at this detailed estimates page. The consolidated surprise page. This way we can see what the stock has done on earnings recently. Danny Boy told us before it was a rough quarter for the DPZ. Very rough indeed. Okay, now why does something like this happen, guys? Those same store sales just weren't quite up to par, and then they're worried about the Pizza Hut. Worried about the Pizza Hut creeping up. So you got that sort of 1-2 combination. And you know what that leads to, my friends? A contraction. Contraction in the PE. Let's see if I can get this. Valuation history, price, PE, trailing 12. Okay, let's do this. Oh, not trailing 12. Let's look at PE forward 12. I think this is going to look more dramatic here. And then let's look at this and what happened. And there you go, guys. You see this? Boom. Big dip down. I'm going to zoom in on this so we can see this better. You can see what happened. And of course you got the numbers down here too, right? I could have just left the numbers. Yeah, let's go more here. Sorry. Let's do a year. A year, you should be able to see this a lot better now. Where these valuations went. So look at this. On the high end, got up to about 38 times earnings. Forward earnings, by the way, guys. Ladies and gentlemen. I just keep saying guys. That's, you know. We need a gender neutral word for like the crew, right? Like, buddy. I don't know. It's got to be one word though, like, or one syllable. It's like, guys. 38 times, 37 times. And then after that report, the market said, you know what, man, no, you're not. It's not going to happen. Got down to about 28 times earnings, okay? Forward earnings. Now we're at 30. So kind of draw that across, and you can sort of see that overall, well, actually, I don't need to draw it across. There's a line here at 30, right? You just kind of highlight that. You can't have Metallica on two stations. I'm a very meticulous curator of my Pandora stations here. Okay. So here, 30. Over the last year, that's kind of a little bit on the low side here for Domino's. So that's what you can see is that the faith has dropped a little bit with those same-store sales coming down. But here's the thing, right? You can't come out here and say we're undervalued at 30 times earnings because they're worried that things are starting to slow here a little bit, right? Those same-store sales are slowing, so now this sort of 30 used to be kind of a peak, right? So in 2015, where we go 2015, the high end of 2015 is about 31 times earnings for Domino's. So we're kind of on par with that. Now let's look back at what these revenue expectations were for Domino's. The revenue growth in 2015, what were we looking for? We're looking for 11% revenue growth in 2015. We're still looking for 12.8% revenue growth here, okay? So I guess that's okay. So dare I say we should be paying 30 times forward earnings for Domino's? So then now follow with me, guys. If I'm thinking we should be paying 30 times earnings because of the revenue growth, what about EPS growth? 2015, you had 19% EPS growth. 2016, I guess you do have to look, we got to kind of look forward though, right? Because we were looking at forward 12 earnings in 2015, so we'd be looking out this way. End up getting 25%. If in 2017 we do get this 33%, 2018 we do start to slow to 20%. Maybe these guys are right in reeling in the valuation a little bit. But if we're still expecting to get a 33% change in earnings this year, then if we keep this constant 30 times earnings, that should boost the stock a bit, right? Okay. That was a long way of saying I don't think anything's too far out of whack on the valuation side. And if this earnings report comes in good, it should support future increases in the stock price. Now, do I think that this one-off was an anomaly? Not really, because this happens from time to time. And this is a concern that the same-store sales are going to be contracting. Now, it's too early in earnings season here to see if the market is going to be looking for things to slay or looking for things to buy. And in Domino's, because it's kind of in an interesting little niche of this market, not exactly, they're not a fast casual or anything like that, right? Where we know those guys are in trouble, going to be under pressure, probably continue to be under pressure. They're in a different sort of world. So it's going to be the story of Domino's versus Pizza Hut. Now they can put some of that to rest here with this earnings report. But that is the risk, my friends. Okay, so now for the good stuff. This is only 10 days away, right? I'd like to go out to the November. That's right, we're going a little further out. See what we got going on here in November. Stock is essentially, it's right about 210. I don't want to go $9 in the money on anything vertical. Rather just go at the money on the first leg here. Let's see what this looks like. And then again, this 220 is the level where the 220s are where seems like the top of this market. So I'm going to give you a few ideas here. The first of which is getting vertical in here, but this is going to be a little bit more expensive than we're used to doing, I believe. Okay, it's close. It's on the border. It's actually not too bad. So if you went long, the November 17th 210 call is going to cost you $770. Simultaneously selling to open the 220 call, you're going to get back $375 of that. So basically $395. Probably much more likely you're going to get filled at 4. So I'm just going to call it 4. Okay. So the difference in the strike prices here is $10. Minus that 4 is $6. So going long the 210-220 call spread is going to cost you $400, right? Options prices are quoted basically per 100. So I say $4, but this costs you $400, okay? To go long the 210-220 call spread. I don't think a beat and raise is priced in. I think a beat and raise, they would be closer to that 35 times forward earnings versus at this 30. I think for the uncertainty that we have, everything's kind of priced correctly here. I'm not seeing glaring inefficiencies in the pricing of the stock or inside of the options chain too much right now. So a bullish debit, it's long the November 17th, and let me make sure this was 17, but 210, 220 call spread for a $4 net debit. And you're essentially hoping that it makes another run up at the highs, okay? And continues from there. I go a little further out. I'm not worried about going a little bit further out here anymore, guys, because we've seen a lot of erratic activity in this first, the week or two following earnings. And most of these stocks have kind of taken a little bit to go in the actual direction that we want them to. Adobe, which will, I'm returning to the good, the bad, and the ugly this week, so you guys will see that coming up. But anyway, you got to think if they resolve some of the same store sales issues, they definitely get back to the 52-week high with no problem, okay? Another way to make a trade like this is on the credit side. So selling an at-the-money call spread or just a little bit out of the money call spread is another way that you can participate in this. So if you just go to the 200, because we saw what this market was sort of pricing in, right? We saw that 200 was the bottom end of that range. So this might be another way that you could play this without having to commit, to the long side. So 200, 195. You got 425, the long 200 put. The short 200 put. That's what you're going to get as a net credit by selling the 200 put. Simultaneously going long the 195 put, you're going to give back 295 of that. So here your net credit is going to be 130. Difference in the strike prices is $5 minus that 130. That means 370 is the amount of money you'd have at risk. So you can make 35% on this trade. And what you need to have happen is shares of Domino's to close at or above 200 at expiration in November. Now keep this 35% in mind, because I like to, when I'm doing credit spreads, not necessarily go as far as I would with a debit spread in terms of the length of time. Because here it's like 10 days, it's a quicker sort of bang for your buck kind of trade. So look at what happens if you move that up to the front month. Selling that same 260 put is going to get you 270. Buying the 195, 168 you're going to give back. So in this case, you're going to make 102 on 398, or 25%. So an extra 10% by waiting another month. But that also gives time for this post-earnings drift to take place. Okay, so I do think even on the credit side, it may be better to go out to the November expiration. A little bit more conservative. And I don't know if you guys have sensed that I have been being a little bit more conservative in general on these. Just because I don't know. The market's been kind of finicky and hasn't been treating us right. It'll kind of jump in one direction and then finally get some traction and move in the other direction. So I want to kind of get out of the way of that and let time be on our side. So here's a bull credit idea: is short the November 17th 200 195 put spread for, in this case, a 130 net credit. Okay. And bears, what you're going to want to do is the debit. The 210 to 200 debit spread here. So bears can go long this 210 put for 835, which sounds like a lot of money, and it is. But you're going to get back 425 by selling the 200 put. So in this case, 410 is the net debit on this. The amount of money you can make is 590 on the 410, good for 143%. How are you going to make that? Shares of Domino's would have to close at or below 200 at expiration. So a bear debit here, long November 17th, 210, 200 put spread for a 410 net debit. So a few ideas for the bulls, the bears, strangles and straddles and things like that right now. I like the way that the options market has this priced in, so I'm not. I typically have to disagree with it, the options market that is, in one way or the other to kind of look at anything like that. Okay, so I think here the let's get back to this chart. Same store sales would have to be great for this to come in and get back up to this level. And I do know there could be some negativity in here. But I'm still bullish on the stock over the long term. So I think that the trade that pays is the bull credit, not the bull debit, not the bear debit. I think the bull credit is going to be the trade that pays. I'm expecting, fully expecting, a little bit of a retrace. I'm expecting this to tick up. If I could draw this out, I think this is going to come down and bounce. But I don't think it's going to happen right away. So I think the bull debit is going to be in a little bit of trouble. And the bear debit isn't really going to pay off quickly. I think timing is going to be rough to get on that. I see this dip here, and it just tells me that this market wants to kind of get in here a little bit and back and fill before it comes higher, which is kind of what I believe. But I don't think this is a situation where it goes down and stays down. I think, and yeah, Jeff, you've got it. We're going to do a morning after DPZ, so Thursday morning, guys, if you're hanging out, 9 o'clock Central, because we're going to have the morning after DPZ. So we can see how this thing reacts in the morning, and absolutely, I think it's going to be a buy the dip buyer. So if it does sell off a little bit here, I think we can get in and buy at this 200. It'll also give us an opportunity to sell that put spread in there too, or go along the stock. So a lot of ideas. I think we'll be able to do that. Which kind of reminds me, let's check in with the Costco situation. Costco's still coming under some pressure here. What's the market doing? Adobe's back over 150, so that's good. Market hanging in there. Euro. Just kiss this goodbye, right? I just want you to tick up, touch this, and then get destroyed. Not like in the current situation. Bitcoin's going through the roof, though, so that's good. Okay. Well, that's about it. As far as lottos go, guys, you know I don't like messing around with these lottos too much when these stocks are so expensive, because it ends up costing you a lot of money to roll the dice. But I think the lotto, if anything, has to be on the bear side. Maybe even 195 puts on the bear side is what you got to look at on a lotto. Lotto should be bears, I think. 195 put, but we try and keep those much cheaper than $168, right? But it's up to you guys. That's a very high risk trade that's likely to blow up. In terms of this bull credit, I give it I would still, given the scenario with Pizza Hut I still think that the bull credit is a 3-star risk situation. So kind of I give it a let's call that 33% chance of being worthless, right? It's kind of 25 to 33% chance of that not working out and expiring for a max loss. That's kind of my guess on that. So that's why I'm saying 3 stars of risk on that bad boy. All right, guys. Well, that's all I got for you here today. If you're watching this later, join us in the chat room. It's coming across the bottom of the screen now. This discord.gg. I'm going to type this in. discord.gg/PBWCMSG. Doesn't stand for anything. But go ahead, hang out with us there in the chat room. We can talk turkey. Also, coming up tomorrow, we're going to have that morning after session. Not tomorrow. Thursday morning, we're going to have the morning after session. Tomorrow, we're going to have Citigroup. I think we're going to do it at 11 a.m. Central because we're only going to have one day on Citigroup to make our decision. So thank you guys so much for hanging out with me here today on Zach's Live Trader. I'll see you guys in the chat room, and I'll see you live mañana. Have a good one. Thanks, everybody.